Hello again, fellow BeachBum traders. We wanted to quickly share with you going through a quick due diligence on a new company, a new stock that we found while we were going in our FinViz screeners, preparing our weekly game plan, our watch list for our weekly game plan this week. And we wanted to see if NUS is the ticker. New Skin Enterprises, is this a stock that we want to buy now? Is it something we want to put on our watch list for this week? This is as of October 31st, 2021. So we're going to go through our normal due diligence process, and we're going to add some additional information for you in this one. So please stick around to the end. Thank you for taking the time to join us for this video. And we'll get started. As you can see in the background, we've got the home page for New Skin Enterprises, and we'll go through some of their home page, but just very briefly, who are they? They're a U.S. company that develops and distributes personal care wellness products worldwide. They've got several brands: ageLOC, it's spas, skin treatments, cleansers, etc. So it's kind of in the personal care realm, spa-oriented, salon-oriented. They have nutritional products, weight management, etc. So pretty diverse. They do operate retail stores in China, and we can talk about what potential impact that may have in the current scenario. And then again, we can see some brands: New Skin, Pharmanex, and ageLOC. They're based out of Utah, so again, and they've been around for a while. So if we just quickly take a look at their homepage, we can see some of their products. Again, spa treatment, New Skin, ageLOC, Pharmanex, vitamin supplements. You can see sales, etc. Just to kind of get a feel for what does the company do? Do they have a professional website? And then once we get to the bottom, we can see some of their social media sites. It's kind of interesting. They're in Facebook, Instagram, YouTube, but they're not on like Twitter. So again, just a real quick look. I usually get to their home page from the link in their company name off of the finviz.com quote, which we'll see in a minute. We'll go through their chart in FinViz, etc. Do our normal due diligence via FinViz, but again, I usually just right click on the company name and then go to their home page from there, so I don't have to search for it. So hopefully that helps, and we'll dig a little deeper. Okay, now I'm on the quote screen for FinViz for NUS for New Skin Enterprises. You can get there just by typing NUS in the search bar. We can see the chart, the current chart for NUS, and we can kind of see why it popped up in the FinViz screener. It is very near its 52-week low, and it looks pretty flat at this point. So when I saw this chart in the preview in the screener, I said, I wasn't familiar with this company. It looked interesting, so I wanted to dig a little deeper. If we quickly look at the weekly chart to see if it's got some range for our normal desired risk reward, we'd like to see a factor of 2 for reward to risk. Well, initially, the top here is only about 60, so we've got about a $20 reward, and we've got about a $20 risk. So that doesn't look so great initially, but if we go out to the monthly, we'll see it has a much larger range. So in the past, it's been much higher. It's been in the 80s, and in the distant past, it's been in the 130s, as high as 140. So said, that looks interesting. It's got some potential. Let's again dig a little deeper. If we go back to the weekly just quickly, we can also see that it looks like it's hit a pretty stable support line here. And we can also see a couple trends that we'll talk about more. It looks like it kind of bottomed out in February of 21. declined pretty severely. Then it went up into the June-July period and has been trailing down since then. We also see the bottom. Again, these are pandemic-related movements. There's the pandemic low. It came back up through early 2021. Then it dropped off, and then it rose into early summer of 2021. It's been dropping off since. I think we'll see very similar things in related products, cosmetics, ultra beauty, Coty, etc. So what I think is going on here is, in the initial reopening, a lot of people bought these types of personal care products, cosmetics, etc., did all their buying, and then throughout this summer there hasn't been as much buying, so it's kind of flattened. Another point to note will become important in our decision is they have earnings on November 3rd. So it'll be very interesting. Some of the cosmetic companies reported poor earnings this quarter. Again, it was summer. I think people bought their cosmetics at the initial reopening, did not buy a lot in summer, and now we're looking towards Christmas. One of my hypothesis is that people may be buying these products more for Christmas if there is not supply chain issues. So those are some of the questions we want to answer. Are there potential supply chain issues? Is this a good holiday purchase or not? Now let's dig into our normal due diligence in FinViz, and we'll possibly use this as an example in a deeper dive on how to do due diligence in FinViz. But here's an example of some of the things we look at. One of the things that was initially attractive about Nu Skin was, hey, they make a lot of money. They've got $2 billion, almost $3 billion in sales, $236 million in income. It's positive. They're a big company and they're making a lot of money, or at least they have in the past. They also pay a 4% or 3.8% dividend. So hey, here's a good dividend stock that is paying a dividend higher than the Fed's target inflation of 2%. So maybe this is a great one for a long-term investment that pays a dividend. Do we see any red flags, any negatives? Well, they got a little bit of debt. It's not excessive. Shares outstanding and float are pretty in line, so we don't really expect a massive offering. Their ratios look okay. Again, I don't see any major red flags in here, and again, it's kind of down in its 52-week low. So again, in this initial look at their metrics, we don't see any major red flags here in FinViz. So we can scroll down, see news, see if there's any red green type of things based on news. Don't see anything again. We can go farther back. Okay, so back in February 21 we saw that low. Well, what was that low? Well, that was their reporting, their earnings. They raised the dividend, they had a profit jump, and look, and then it went down. So something was said in their earnings call. It missed expectations in some way, and it went down. So we can hear their description. Then we can look at their financial statements here in FinViz. Again, we can see their EPS is increasing. Their revenue has been kind of flat, but a small increase. So again, it looks good. They're making money. It's been increasing. Let's look at the quarterly real quick. And again, revenue, okay, so there was a slight dip in March of 2021, and earnings, same way. There was a slight dip, but then it seems to be recovering. So again, these indications seem like that maybe this is a great recovery play, good swing. So we'll dig a little deeper, but from the initial look in FinViz, it looks like it's worth some further due diligence and further consideration. Okay, let's do our normal due diligence using Seeking Alpha. I'm on Seeking Alpha. You can enter again NUS in the search bar up at the top, or you can change NUS after the symbol in the URL. And I'll put all these URLs in the description box below for quick access. You can also find our affiliate link to FinViz, and we're going to share with you a new tool that we are going to use going forward on due diligence in a few minutes, so stick around. Some additional information that I think you'll find helpful. But again, we typically go to Seeking Alpha, look them up, do a quick look through, some of the analysts. We're just looking for red flags, positive, negative, the analyst stuff, it looks okay. Some of it's relatively current, so possibly positive. And then, we look at the news and we can kind of see, well, why is it downtrending? Well, the last news was they guided revenue below consensus. So the revenue guidance back in October was below consensus, and it's been declining. So the decline's not terribly surprising. Again, hopefully, potentially a turnaround play. Then in the past, we can see they have a sizable dividend. We can see they've beaten expectations, beaten EPS, beaten revenue in the past in August. So the past performance has been good. Their guidance for Q3 was negative, so I would expect when they report earnings on November 3rd, it may miss expectations. It'll may be in line with revised expectations or may miss. If they miss and it drops, that may be a great buying opportunity. And so, so far our indication is this is maybe one we want to watch for a miss on earnings, irrational decline, a great buying opportunity for a turnaround play. Very possibly. We'll keep digging to see if there's anything that goes against that hypothesis, but so far it looks like that's something we want to watch for and take advantage of. We can see valuation's positive, profitability's positive, but growth is very negative. So again, their guidance was negative. So we see annual revenue's pretty flat, quarterly revenue again pretty flat. Okay, we can see their quarterly earnings per share. There's a little bit of a dip, maybe a bump up, Q4. If we look at annual, again, there was a dip, and then now it looks like it's uptrending into 2022. So again, this looks like a possible positive turnaround. Look at some of their metrics. See if there's any red flags. Don't see anything in their valuation, etc. Profitability, all positive. That's good. Dividends, dividend yield is about 3.8%. Dividend growth history, it has grown in the past. It looks pretty flat now, but stable, so that's good. Enterprise value, they do have some debt, they've got cash, a lot of institutional ownership. That's positive, that's a good thing. Institutions tend to hold, so again, all positive so far. You see some of the competitors. ELF is one to listen for. Sana. Risk Altman's score, this is an important factor we typically look at. We want that to be positive. That says they're solvent, they're stable. Beta is a little negative, so it's going to go a little bit inverse to its market. Not a lot of shorts. Again, you have a lot of institutional ownership, so one would expect it to be pretty stable. Income, they make a lot of money, positive EPS, some debt, but their Altman Z-score is positive, free cash flow looks good. So, indications here so far look good. We've on Seeking Alpha, it says 6 analysts, and the consensus is buy, and we'll see some other indications in some other sites as to what the analyst views are. So again, from our Seeking Alpha due diligence, things look okay. Don't see any red flags, so now we'll continue to dig a little deeper and see if this is something, again, we want to continue to consider for our watch list, consider for a near-term buy. or a potential long-term investment. Okay, now let's do some due diligence in Webull for NUS, New Skin Enterprises. And we'll use this as an example in a future more detailed video on how to do due diligence in Webull. But I'm on the Stocks tab. This is the online browser version of Webull, and as always you can find our affiliate link to Webull in the description box below. Get 2 or more free stocks with your copy of Webull. So I brought up NUS. You can again enter NUS in the search bar up here and search for it in the stock screen. And I'm looking at a 5-year chart because I wanted to highlight this pivot point where we can see currently he's hovering around this long-term pivot point around this 40 mark. And that looks pretty attractive. We can see the bottom. We can see the next support level is also in this 26 range. And then we can see the resistance, the high in the 88-90 range. So again, it reinforces that it's approaching a pretty stable position. And we'll see what happens at the earnings report. So another nice feature in Webull on the stock screen is if you expand this right hand tab, we can get some quick information about any stock that you happen to be looking at. So again, this is a nice helpful feature in Webull for doing some due diligence. We can see, okay, their earnings is on the 3rd, as we've mentioned. Here's the estimated EPS. We can see a quick view of the chart. We can close this tab. We can go to the bottom and bring up the bottom tab. And again, these are all features to do due diligence on the stock screen in Webull. We can see, recent news. Okay, we can read more about what people are looking at in terms of the earnings for the 3rd, earnings preview, etc. We can take a quick view at their financials here in Webull as well. Again, we can see another view. My opinion, it's always helpful to look at multiple sites, see if there's a consensus view, are they consistent, etc. We can see, their income seems to have been declining. They've also been beating estimates on income. Look at their balance sheet. Balance sheet's been increasing. That's positive. Cash flow, again, it's positive. And the earnings, they've been beating estimates. That's good. Financial ratios, return on equity had a decline and is now uptrending. Again, all positive factors so far. We could look at their income statements. Okay, so they had this decline. And now the estimates, they again outperformed. We're going to see revenue, again it's similar trending. Operating income, look at the balance sheet, all very similar, looks flat. Cash flow, we can see, okay, that was their decline, their bottom, but now it looks to be uptrending. So again, all positive so far. We could again get another view of analysts' consensus here. In Webull, it says they've got 5 analysts. It's a consensus buy. We've got another nice thing about this due diligence in Webull is we can see kind of a histogram of the analysts. So we can see most of them are hold. We've got 20% buy and 20% strong buy. So again, that's positive. And we can see a histogram of the price targets. So the average price target is 40.15, which is that's the current price. That's where it currently is. So the average price target is 54, high end 70, low end 43. So if we go based on the analysts, we've got about a 30% upside. And we saw the support was in the 20s, so we've got $20 downside, $30 upside based on analysts. and you can see the support and resistance trends here in Webull. So again, very helpful. You can see press releases, corporate actions, when they declare dividends, etc., the ex-dividend dates. So the last dividend was on in May, paid 38 cents. We can see options. It is optionable, so you could, if this is a long-term investment, you could write covered calls against it, increase your dividend yield. So again, I think this is very helpful for doing due diligence, the stock screen in Webull. Okay, we'll probably do a more detailed video on this, but this is a good example. So, okay, here's another great tool. As we promised you, a new tool for some additional information for our due diligence that we'll probably use in all of our due diligence going forward is ChartMill. And we'll include our affiliate link to ChartMill in the description box below. But again, I think using multiple tools, multiple sites, to get multiple views on a stock to do your due diligence is always helpful. We'll use this due diligence in ChartMill on New Skin Enterprise as an example in probably a future more detailed video on how to do due diligence using ChartMill. But we wanted to share that with you now. Again, you can go to ChartMill using our link in the description box below. Just enter the ticker, any symbol in the search bar, and you will come to their initial profile screen. And you can see there's a great overview of many of the factors you want to consider in your due diligence for any stock. We can quickly see a technical rating, a setup rating, and this is kind of a unique feature in ChartMill that it gives you some input as to the current setup. So we can also see a quick view of the chart. Again, I'm going to go through this rather quickly just to get a feel for, okay, what's ChartMill's view on NUS in terms of, is this something we want to buy or consider to watch? Again, we can see similar metrics, similar data. We see analyst ratings, etc. And this is on the profile tab. Another nice feature in ChartMill, as you can see, we can quickly just click through these different tabs. We can see the charts very similar to FinViz, but again, another view. See moving averages, supports. We can get multiple views, daily, weekly, monthly, etc. So again, you can experiment with which those views you find useful. Again, here's some unique features in doing due diligence in ChartMill. Is we can see technical analysis, so we can get a technical analysis rating and various key takeaways. So the technical rating is pretty neutral here. It's just 0. Well, it says bad. We know it's been declining. It looks like it's at a support level. It's pretty, again, pretty negative, but it's again saying this 40 is a good support level. Nice thing is we see the setup. It's saying it's 8 out of 10 on a setup. So it's saying, okay, in the current position, it's a good setup for a buy, a swing. And again, you can read all the red flags. Again, we know it's been declining. See all the trending. All the trends have been down lately. Performance recently has been down. We know that, but we're looking at this setup as a potential swing turnaround play going forward. So that's very helpful. And we can also look at their fundamental analysis. And again, this is a nice feature here in ChartMill. It says fundamental ranking is 6. So again, that's pretty positive. And this is kind of a nice graph. It can show you the features and shows green profitability, positive 6 out of 10, valuation 8 out of 10, growth 7. So here they're saying it's a positive growth. Seeking Alpha, the metrics there said it wasn't very good in growth. They gave it an F. So a health rating 4. That's kind of interesting that they're some of the metrics they're saying are not as healthy. And again, you can read each of these in more detail. We're just trying to go through quickly to get a feel for if this is something worth watching, buying. Dividends obviously positive. They pay a nice dividend. And again, more metrics information. So again, these analyst tabs, analysis tabs, seem to be kind of unique to the view on ChartMill, and so it's something we'll continue to use going forward. Analyst rating, consensus buy, 73%. They have, 3 analysts say buy, target price of 55. And in their case, they're saying only 3 analysts. Now, I think Webull said something like 5, and Seeking Alpha, or someone said 6 or so. So, again, you get different information in these different sites, so it's kind of useful to look at all of them, get a feel, and then make your own decisions. So, here we can see historical information on the analysts. So, again, useful information. And then again, you can go into more EPS estimates. You can dig into their financials. We've seen this information. This is actually their financial reporting, similar to what we've seen at the bottom of FinViz. Ownership metrics. Again, very similar to the graphs that we've seen in Seeking Alpha, but again, you can dig into more detail. And news. So again, I think this is great. These analysis tabs seem to be unique to ChartMill. And again, this is something that we'll probably do a more detailed video on how to use interpret all this information. But I thought this was a great tool to add to our due diligence, to our toolbox of due diligence, and we hope you will as well. Again, you can find our affiliate link to ChartMill in the description box below. We hope you find this helpful. If you found this video helpful so far, please smash the like button. It will help us with the YouTube algorithm to share this information out to more of your fellow traders so they can benefit from it as well. So we really appreciate it. And now we'll do some summary and make a decision on whether NUS is a stock to watch, stock to buy, what we want to do going forward. Okay, as we mentioned, new skin, NUS reports earnings on November 3rd, and we wanted to look at that article that we found doing our due diligence in Webull to see what factors do we need to focus on when they report earnings on November 3rd. So you can see from this article said they're likely to display year-over-year declines in both the top and bottom lines when it reports for third quarter on November 3rd. So suggesting a drop. So again, so far, we're expecting poor earnings on November 3rd, even though they've guided down, and we can see the discussion that they've guided down. Personal care, blah. Okay, so what do we need to focus on in this report? As you can see, in the past, they've reported that their third quarter revenues bore the brunt of challenges stemming from the Delta variant. So that was one headwind, and that caused their recent decline that we saw. It also says government-imposed restrictions disrupted sales in mainland China and Southeast Asia. Well, we saw they have retail stores in China, and that was a concern, and we see that has had an effect on them. They also encountered disturbances in promotional activities. Okay, so travel, disruptions in travels impacted their sales. They guided revenue down, so that explains the declines. And again, we can kind of expect this earnings to be bad, right? Now, whether the market reacts irrationally negative or just based on the previous guidance and it just continues to decline in the near term is hard to say, but that's why we want to be watching it very closely when they report earnings. Now, on the positive side, It looks like they're launching a new product. It has positive acceptance in the U.S. Also, they're doing advertising digital tools with Tencent in China. So hopefully their China business will improve. Again, new product in the U.S. So going forward in the future, these indications are positive. And again, you know, their selling costs are going to increase. Obviously, they're going to be doing more travel, etc., as things reopen, assuming that's the case. So again, this sounds like a potential turnaround play. Again, the key is we're going to be focusing on their earnings on November 3rd. In conclusion, we're not going to act on anything until after we hear those earnings. We are going to put NUS on our watch list. Watch for the reaction to those earnings, and then watch for a bottom, a stable bottom, and turn back up. Again, this looks like a turnaround play, potential long-term investment, pays a dividend. It has options. You can write a covered call against it to increase your dividend yield. Long-term, it looks positive. Short-term, obviously, is very negative, and we're not going to take any action until after we hear that earnings report. So we hope all this helps. Please let us know what you think of this video. What do you think of NUS? Do you have any experience with their products, their business, etc.? In the comments below. Again, provide us your feedback on this video. What did you like? What can we improve? And we hope that you like it. If you're not already a member of our BeachBum Trading community, we hope that you'll choose to subscribe. Share this with your other traders to help them benefit from this information as well. So good luck. Have a great trading week. Bye. Thank you again for watching our video. We hope that you liked it. If so, please smash the like button. Give us a thumbs up. If you're not already subscribed, please consider subscribing to our BeachBum Trading YouTube channel. Please share this video with your fellow traders and friends. And please give us your feedback and any recommendations for improvement in the comments section below. And let us know what else we can do to help you in your trading career. Thank you again. Good luck and have a great trading day.